Our next guest is part of a group of former pension heads that believe meddling with Canada's pension plan model would be a mistake. Jim Leach led the Ontario Teachers' Pension Plan until 2014. He's now affiliated with Queen's University and several major Canadian foundations, and he joins us here in studio. Jim, it's nice to see you.
Good morning, John.
This has become a pretty big conversation in the country right now. When did this first start to get attention, though, in the circles in which you travel?
I sort of heard rumors about it maybe a year ago. And at that time, I kind of dismissed it as being, a lot of misinformation, disinformation, et cetera. I was very surprised when that open letter was published. Appears to me that it was very, very counterproductive and a lot of misinformation, and some cynics might say a lot of self-interest.
Okay, well, let's go through some of those reasons. Counterproductive, how come?
Well, I mean, I think we have to go back a little bit. People have short memories. 30 years ago, we had a number of the large pension plans in Canada were in very serious trouble. We went through a whole series of reforms. In Ontario, the jointly sponsored pension plan was created, where the pension plan was moved out from underneath government and established as independent, managed jointly by the Ontario Teachers' Pension, or by the government and the teachers. So the liability was in fact shifted to them. We had Canada Pension Plan, which was in serious trouble. Went through a number of reforms and came out the other end as the Canada Pension Plan Investment Board to give it separate governance and separate investment. What's being talked about now is kind of returning back to those earlier days when, in fact, the pension plans were not independent, didn't have separate governance, and were in big trouble.
And then the risk, in your opinion, of investing more of the funds they represent in Canada versus having the option to explore the rest of the world would be what?
I think there's a couple problems with it. The first is, as you say, the risk of diversification. We have to remember that to fulfill the pension promise that's been made to hardworking Canadians who have saved their money, and these pension plans are holding in trust on their behalf to fulfill the promise to give them a sustainable future, secure financial future. About 20% of the funds are represented by contributions, which have been made jointly by the employee and the employer. The other 80%, which is required to pay these pensions, are the investment returns. So if the investment returns are lower, it's tougher and tougher and tougher to meet the promise that has been made to all of these workers.
I guess the broader concern, and it's a dialogue we hear from these CEOs that there's not enough new investment in Canada. Everyone's trying to figure out where the economy goes over the next decade, beyond that. And at least some of the argument seems to be rooted in that. From the CEOs who did sign the letter that we've heard from, they say quite simply, we've got great companies here, why not invest more at home?
I've yet to hear of any project or company in Canada, major company, good company, et cetera, who is having trouble finding funds. That doesn't exist as far as I can understand. Let's go back to the question, or one of the questions though. A pension plan in Canada its preference actually would be to invest in Canada. Diversification aside, there are two advantages to investing in Canada. One is you're not taking a currency risk because our liabilities are in Canadian dollars. And secondly, there's a information advantage. We know more about what's going on in Canada than most other people. And that's why you do have a significant home bias at the present time. I think I looked yesterday, of the big Maple 8 funds, the least is about 15% invested in Canada, and the most is around 60%. So somewhere between 50 and 60, I think they kind of average out at around 40%, have their assets invested in Canada, or 40% of their assets are invested in Canada.
Right.
So there's a huge bias. It's 10 times the capital markets of Canada versus the rest of the world. So there's a huge bias towards Canada. And I have, as I said, I have yet to hear of a major project that has come to market that has failed in its financing because Canadian pension plans weren't there.
So then, just to circle back to the letter itself, if companies aren't having trouble, in your opinion, gaining access to capital, why do you think they would sign the letter?
I'm not sure. I think there's a lot of misinformation, a lot of disinformation. A couple I've talked to who signed it said, do you really understand what you're talking about? What you're talking about is mandating the savings of hardworking Canadians that are held in trust to secure their financial future. You're mandating where they can invest that money. You're not talking about doing it for your own personal savings. You're not talking about doing it for RRSPs. You're not talking about doing it for defined contribution plans. There's something amiss here.
All right. So what would be your message to Ottawa, where we have heard this subject come up a few times recently?
Hands off. Canada has got the gold standard in pension plans. They have independent governance. They are independent of government. They're not being interfered with. They have great financial returns. The Canadian model is the standard that most other countries are trying to emulate. And don't mess with it, because 30 years ago, before that model was created, you were in big trouble.
Now, just to be clear, it's not as if you're not involved and haven't been involved in initiatives that are all about investing in Canada. When the creation of the Infrastructure Bank came to, you were involved in that behind the scenes. What are some of the learning lessons, though? Do you think, broadly speaking, outside of those companies getting capital, is enough money coming in to invest in the story of Canada when you compare our economy to other economies? That's still a broader question. If pension funds are looking around the world and they're seeing better opportunities somewhere else, why are they seeing better opportunities somewhere else? Why can't we have better opportunities here?
That's a great question. And that's where government does have a role to play. They have a number of levers that they can pull to try and increase the productivity for our economy, et cetera. One of them is not forcing pension plans to artificially direct funds towards Canadian companies just because they're Canadian. What government can play a role here, they have a number of levers they can pull. We could address interprovincial trade barriers. Almost every study says that will raise GDP significantly. We could look at some of our infrastructure investments. The Ontario government just made a pledge that they will never privatize the Gardner and the Don Valley. That, I believe, is a very short-sighted idea. You want Canadian pension plans? They would line up around the block to invest in that. How about at some of the airports, et cetera? Now, other policies they have and other things levers they can pull are things such as tax policy, where it could encourage greater research and development and investment in Canada. They can use things like the Infrastructure Bank, both in Canada, federally and provincially, have created as a way to de-risk some of these investments and make them more attractive.
So just to summarize, since you've laid out a lot of the reasons for your concerns, and you have pretty strong concerns here, what do you think the ramifications of moving down this path would be on an economic front for Canada? How do you think it might impact?
Well, what you're allowing is the federal government to use the savings of pensioners in Canada, all Canadians given Canada Pension Plan, but 350,000 teachers, et cetera, to use that as a policy lever. That's not a policy lever. That's their money to be invested to guarantee their economic future. So it's hands off, in my view, should be hands off. And Yes, Canada has to address its productivity issues. Yes, Canada has to address greater investment in Canada, both from Canadians and also internationally. But the effort should go into ensuring we have the right climate to ensure that we have investment coming into this country. Things like proper regulation, reliable regulation that doesn't change on you, those sorts of things, very important.